my opinion is, yes, they'll be approved, and a whole batch of them. I don't know if all of them, but I think a batch will all be approved about the same time. You're talking about opening the floodgates to hundreds of trillions of dollars of wealth where they can buy it in an instant and they can finance it and they can buy it no money down. And so right now, and after they bought it, they can borrow against it. And you got to contrast that to the current situation where it takes me a year to set up the account. I have to come up with the cash and I can't borrow against it, and everybody criticizes me, and then I worry about the crypto exchange failing. So, you know, that's going to be a big change for the industry. It'll be good for everybody, and it's definitely going to be a big boost for Bitcoin.
The coming BlackRock Bitcoin ETF is going to unleash hundreds of trillions of dollars onto Bitcoin. Saylor recently spoke at the Australian CryptoCon. Within his interview, he gave his thoughts on the coming Bitcoin ETFs and how they are going to affect and benefit Bitcoin. His main message: buy Bitcoin before BlackRock and institutions buy it all up. For the first time in history, retail investors know that institutions are coming and they can front-run them. Make sure to stick around to the end of the video where Saylor explains exactly why an ETF opens the floodgates and why some institutions can only buy Bitcoin through an ETF product. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
It's a two-part question. I think that the ETF, a spot ETF, definitely increases appetites in general, because right now, in order to buy Bitcoin, you have to set up a relationship with the crypto exchange, and most institutional investors don't have a crypto exchange relationship, and most retail investors don't have one. And most of the time, they don't want to add a new one. It takes 10, 20, 30 years for them to establish these relationships. So when the ETF comes on, you know, you could think of an ETF kind of like like a website, like an internet address. It's like, does your company have a URL or an internet address? If so, it's easy to find you. If not, it's really hard to find you. If I can find a website in Australia in about 5 seconds with the URL, and it might take me, 3 months to come there and knock on the door. So ETFs are like the universal protocol of access for financial assets. They're revolutionary. If you don't have the ETFs, it's probably, to say it's 100 times harder to buy would be an understatement. It might be 1,000 times harder. And it's not just because of that, but the other catch is, it's not just 1,000 times easier to buy Bitcoin via an ETF, it's also free, because I can finance the deal. If I'm an investor, I could pick up the phone and buy $1 million worth of Bitcoin in about 15 seconds and put up not a dime, because the bank, JP Morgan or Morgan Stanley, will loan me the money. And so you're talking about opening the floodgates to hundreds of trillions of dollars of wealth where they can buy it in an instant and they can finance it and they can buy it no money down. And so right now, and after they bought it, they can borrow against it. And you got to contrast that to the current situation where it takes me a year to set up the account. I have to come up with the cash and I can't borrow against it, and everybody criticizes me, and then I worry about the crypto exchange failing. So, that's going to be a big change for the industry. It'll be good for everybody, and it's definitely going to be a big boost for Bitcoin. As for MicroStrategy's position, if you look at the futures ETFs, the reason people don't like futures ETFs is by the time you're done with it, they've charged you 10% fee a year. I mean, the cost of rolling the futures is not 1% or 2% a year. It's like 5 or 10 or 20% a year. It's obscenely expensive to cover this with futures. So the spot is going to be a 50 basis point or 100 basis point or something. But let's say 50 basis points. There's a fee to a spot ETF. And over the course of an infinite duration asset, if I charge you 1% a year, that's like taking 20% of your money. 1% a year over the course of 30 years, discounted back with normal interest rates, is like you invest $1 million and you give me 200,000. That's the cost of 1%. The cost of 50 basis points is 10% of your money. over the course of the infinite duration. So these ETFs, they charge a fee and they have no leverage. They're unlevered and they charge a fee of some sort. MicroStrategy doesn't charge a fee. We don't charge 50 basis points. We don't charge anything. We basically provide that acquisition and custody service and cover it with our operating business. So we don't charge a fee. We are levered. We use leverage. So we borrowed $2.2 billion at 1.5% interest to buy Bitcoin. If you can borrow $2 billion and pay 1% interest and buy Bitcoin, I would recommend you do it, right? That's not a bad idea. You probably would do it. We actually borrowed $1 billion at 0% interest. And so if you could borrow $1 billion at 0% interest and buy Bitcoin, you probably ought to do that too. But if you can't do that, you can invest in MicroStrategy. So what we are is, we are a very special Bitcoin investment vehicle. We don't charge a fee, we use intelligent leverage, and we generate a tax-deferred Bitcoin dividend of sorts, because we're acquiring Bitcoin. We use our cash flows to acquire Bitcoin, we use debt to acquire Bitcoin, and we use equity to acquire Bitcoin. So if you want unlevered and to pay a fee, then use the spot ETFs. And if you want levered and you don't want to pay a fee and you want to get some kind of Bitcoin premium, then you would use MicroStrategy. Now, we're obviously more complicated. We're not for everybody. And our capital structure, you couldn't buy $25 billion of MicroStrategy stock on Monday morning. If you did it, it would drive the premiums through the roof. You couldn't squeeze into the asset. But if you're a sovereign wealth fund in the Middle East and you wanted to buy $25 billion of Bitcoin via spot ETF, you could do that and it would trade at parity at the asset value. So those ETFs, they meet a particular need, and it's important for the industry. We need them. We can't move forward without them. But they're not MicroStrategy. We're a very special purpose entity, and we'll stay that way. And we're not going to charge a fee. We're going to continue to use intelligent leverage, and we're going to work to generate that Bitcoin premium. And then, of course, some people will just buy the underlying Bitcoin, and that's fine too. And they'll buy it and they'll put it with a custodian, and others will buy the Bitcoin and they'll self-custody. And they're all different modes of investing in the asset class. There isn't a right answer, except that there's a right answer for specific investors. If you're a wealth fund with $100 billion and you're required by charter to trade through a particular bank in a particular way, you can only buy the ETF, and in a decade you couldn't do anything else. So it's just, you're either going to get their billions of dollars that way, or you're not going to get their money. And so everybody's different. I think the great thing about Bitcoin is the diversity, right? Like I said with the protocol, 1,000 different companies can create their own Bitcoin applications and use the protocol, and it's beneficial to all of us. We all benefit. The winners will win, the losers will lose. And 1,000 different types of investors can buy Bitcoin, and it's beneficial to everybody. So the more diverse the ecosystem, the more applications, the better it is for the security of Bitcoin, the better it is for the asset price of Bitcoin, the better it is for the political support of Bitcoin everywhere in the world. And so I think generally we should welcome all of these different financial applications. And there's always a tendency to say, well, there's one right one. But, you know, the Austrian economics tells you that you don't really know the right answer. All value is subjective. There'll be 100,000 businesses. Some will succeed, some will fail. I've lived long enough to be able to look back at my life and see things I thought were good ideas that didn't turn out well, and to see things that I thought were bad ideas that turned out really well, right? I famously tweeted in 2013 that, you know, Bitcoin's days are numbered and it's going away, and I think Bitcoin was a couple $100 a coin at the time. So I've been famously wrong, and I think that the result of having lived long enough and been wrong about things is it gives you humility. And then when you see other people that want to do something with your network and your asset, you welcome them into the space, and then you wait and you let the market decide. And the market will sort all this out for us, and we're all going to benefit because Bitcoin is really the most pure form of capitalism in the world. It is a market economy with everybody on earth thinking about how they can best contribute to it, and that's one of the things that makes it so special. It's right, it's no gatekeepers, open, permissionless, and every smart person, every entrepreneur is trying to figure out how to make your Bitcoin more valuable. And MicroStrategy will do its part, and the ETFs like BlackRock and Fidelity, they'll do their part. And companies like Fidelity, they're going to do lots of different things. They're going to have an ETF. They're also going to have Fidelity Digital Assets, where they actually have Bitcoin custody for high net worth individuals and institutions, but then they've also got a third offering, Fidelity Crypto, which is very different from the first two. So there's lots of different approaches to this, and we should welcome them all.
So there's Michael Saylor on the significant impact that the BlackRock Bitcoin ETF could have on the cryptocurrency landscape. Michael Saylor's perspective, shared at the Australian CryptoCon, highlights the monumental shift that's about to take place in the world of Bitcoin investing. Remember, with institutions like BlackRock entering the fray, the dynamics of Bitcoin investing are poised for a dramatic change. This could be a pivotal moment for retail investors to make strategic moves before the market experiences this influx of institutional investment. Thank you for joining us today and diving deep into the potential of Bitcoin ETFs and their role in shaping the future of cryptocurrency investments. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.